The key point behind the sale of the original Pasty House is that what we are not doing is selling to pasty shops, to very strong, resilient, profitable pasty shops. We're looking at something very different. We're looking at something that entirely buys into the change in consumer behavior and what is going on within the market, as you will see from the market analysis. There is huge growth in this area. So we have subjected the business to an old-fashioned SWOT analysis. Of what you had in the past is two long-established, highly profitable pasty takeaway and cafes in Plymouth and Tavistock. During COVID, they managed to do a very strong pivot and shifted through to a new model, which was very takeaway and delivery driven. They built their own structure, their own infrastructure, both in tech and physical infrastructure, and created a new brand with the original Burger House. Turnover went up substantially, and we have a grant adjusted operating profit of somewhere in the region of 130,000. But you can see that in more detail in the financial analysis. But the future is really what we're talking about here. There are multiple things that can happen to this business in terms of organic growth, but really the exciting piece is this move towards 5 new pre-Deliveroo locations identified and multiple additional locations identified. And the really exciting thing is that it is a substantial cash-generating organic growth model. So key issue is not to profitable pasty houses. The owners are selling a highly process-driven, because this is their background, extensively tested contemporary model that fits within a new post-COVID world of consumer behavior change. It is extremely cash-generative and capable of huge organic growth. The model is designed specifically and initially to work in the pre-Deliveroo locations that are too small to be profitable for the large platforms, which we can see from the market analysis. Now, this provides them with first mover advantage, but actually they're very comfortable with the model that when the bigger platforms comes in, the prices will go naturally up, and they're already working with them at that same time too. We are selling a digital and physical infrastructure which is independent of any technology, suppliers or location, and this is a critical point in terms of the asset being actually on an ongoing basis worth something. Multiple new locations already identified, and this piece here that the new unit payback could potentially be within 1 year means that there is very little money required to expand the business quickly. So the business set up 18 years ago. You can go through this yourself, but it is a strong brand that has been built. This point is critical that Nigel and Janet have worked at a very senior level, and the business in terms of systems and processes very heavily reflects that. It was always originally profitable, but the strength of the brand is a lot more just than this logo. Actually, it's the black and white vertical stripes that basically surround all the bags and are very recognizable in the local area. They have very strong brand values. They heavily work within the community. They've won multiple awards over the years and continue to strongly work within the community. So what are the strengths of the business? Well, as ever, you need to have the high quality leases. That's something that can't be ignored. But there's some really core pieces in here without going through every aspect of this document. The fact is that we have a profitable core business that is cash generative. We have a highly process driven business because that's the core of the way that Nigel and Janet have set it up. They have additional businesses. They come from the background of understanding huge numbers of locations and managing that. They have got loyal and experienced delivery staff, but this is more interesting than just the fact that they happen to have this. They've built a model where the drivers are actually employed as drivers and fully trained in all aspects of the restaurant operation. In other words, we get past that whole issue of some of the kickback and competition for drivers and the gig economy. They have already identified multiple app alternatives, and therefore they are not having to the business isn't potentially heavily dependent upon something else. And we have this very low cost of replication, which potentially allows you to be opening a new location out of cash flow. So the strengths are very strong. The supply chain is again very strong, huge issue that we have all over the world, but particularly in the UK. They've got very strong relationships with local suppliers, and uniquely in my experience, dual supply available across nearly all key product areas. Which means that they are so much less at the mercy of some of the supply chains problems that already exist. This strong company culture has produced very low staff turnover and has meant that they have not had recruitment issues, which again is extremely unusual. They have built out and continue to build and are investing heavily in the marketing team to assist in the growth of the business. They have this bespoke, non-platform specific infrastructure, which is severely underutilized. At its most simple, they close at 8 o'clock in the evening. So there's the infrastructure that they've built, that is owned, that is part of the asset, is simply not being properly sweated. There's an awful lot more that can happen. They have very tight financial controls and multiple plans to improve the gross profit, which you can see within the financials. And again, this is something that we have identified that could do with a bit of work, but actually the business remains very profitable at the moment, but it shows the level of control and progress and momentum that continues on with this business. And the establishment of the new model, the pivoting and so on, has meant that not everything has been capable of being done. And right now, at the moment, they're working on building those improvements in the cost base. We have this very strong management team with training and development going on all of the time, which functions independently of the owners and has multiple expertise in a lot of key areas, which very strongly links through to the marketing. So we have these quality new roles available and this strong agility of the brand, which allowed them to create the original Burger House, will allow them to build the original Pasty House, so the original and potentially the original Pizza House. They have existing marketing channels over and above, which they've tested in the past, leaflet drops, more traditional routes. But I think most critically here is the fact that we have this very, very simple model. And this simple model allows the fact we don't need high skill levels, we don't need front of house staff. And it will also reduce the very substantial implications of the national living wage and employer NI increases that are coming in 2022. It's also a model that is not dependent upon the current difficult driver market because they've built this themselves in a way that bypasses that. Weaknesses. There are some weaknesses. So all of these are being addressed, which is the key fascinating point from my perspective. They are building out a more formal customer feedback process and a new tech solution which will be in place to allow tech feedback, but also the creation of a human concierge so that there you have a real human being at the end of the phone. And that is happening as we speak. The new management team, the new marketing team are building out the social media. We know it's underutilized, but this is essentially an opportunity to. The gross profit is 2 or 3 points below what it could be. Again, this is being worked on. The failing high streets where they are currently located is something that they have already pivoted to take account of this. And in one particular location, they have halved their rent. Hence this dark kitchen with a high street presence. In other words, they've managed to be able to create a model that can work with the same level of efficiencies as a dark kitchen, but can still be on high streets. There is no subscription model. Again, it's being developed. There is no intelligent routing at the moment. The routing of the delivery drivers relies upon the experience of the drivers and the management team. But already this is transitioning to a tech solution which will optimize the route planning and speed of delivery. There is no delivery loyalty scheme. It will not surprise you to know that that is being developed at the same time and will be in place very, very soon. There is no order tracking, and the number one complaint from customers from this piece of research here is about slow deliveries. But they are bringing in, at the moment, real-time tracking with new software in place to avoid this weighty frustration. They already have very strong processes in place that if somebody gets something late, they get very strongly free food, vouchers. They've built their way around this extremely well, but the tech piece is currently in process. And finally, and again, this sits sort of also in that category of potentially being an opportunity. The sales of catering are very strong, but nothing is happening at the moment in terms of pushing that, in terms of actively promoting it. So again, the weakness being that they're not doing all that they can with that. So the opportunities fall into two distinct categories. We have got very strong opportunities in terms of average transaction value increase, and a number of these are already being identified. For example, barbecue chicken wings as an incremental sale increased average transaction value by 19p and 23p in 3 weeks. We've got bunches of new things in place, incremental sales such as mozzarella sticks, lots of different things just to drive up that average transaction value, and all of this is waiting and being tested at the moment. We have 2 price increases planned and in place to combat the cost base increase. But this is something that everybody is going to have to try and do as the cost base increases. But it's already planned, and it will head off at the pass any issue with margin control. The opportunity for social media improvement is huge. This area is something that could quite dramatically improve the sales, both of the existing locations and of any potential new locations. Staff efficiency, because a lot has been going on in terms of reacting, testing, trying, pivoting new stuff. The efficiencies of the staff may not be all they could be, but there are already strong training programs being developed, and that is continuing to happen. And again, I reiterate that this is the background that Nigel and Janet come from. So making staff work in an efficient, content manner is at their very core. They have already invested in new equipment to make everything more easy for the staff and for customers. The increase in buffet sales is huge, and this is partly as a result of the fact that through COVID, an enormous amount of competitors in that catering market went bust. So there's a lot of organic growth opportunities within the existing businesses. But the real opportunity here is not with organic growth, it's with the huge expansion potential. So the expansion potential is based upon the new locations. 5 of towns have already been identified with some specific locations that fit within this 20,000 population and below, which is the pre-Deliveroo market, where the demand is still there, but it's too small for Deliveroo, Just Eat, Uber Eats to go into. The launch of the original Pasty House, the current locations already can be producing the Pizza House. This went from idea on a phone call to ready to push button within a week, demonstrating the enormous business agility that exists. Now, there are multiple advantages to this. Off the back of that is that idea went from Nigel and Janet through to the management team, and within a week they had a very high quality pizza ready to go out and be launched potentially under this new original Pizza House, using the existing equipment, using the existing tech, using the existing physical infrastructure. Pizza is obviously high margin, and there is no additional equipment investment required. So new locations can have all of these additions already added on. They can have the extended trading hours added on, this closing at 8 o'clock, this extension on into much more of a much longer day, and using the asset properly. There's an awful lot that can be done then in terms of on an ongoing basis to build out new products to fit with the shifting demands. And that means things like, for example, hard shakes, hampers, but also developing through all of the big platforms, looking at ways to deliver other aspects, non-food aspects as well. We have this opportunity, which is huge, to be able to get a payback within a year, but actually have this funded through cash or asset finance. In other words, not even touching the profitability. These businesses can grow through simply the cash flow of the two existing locations and a little bit of asset finance. Then we also have this potential, totally untapped, of joint ventures with various other restaurants, growth kitchens, existing local restaurants that have looked at the whole model and felt that they can't afford the infrastructure. And then we have this Uber-style delivery of product, i.e. product that is non-food. Can you pick up my shirts on the way type of thing? These things are happening within the marketplace all the time. Now, the threats, there are some threats, but all of these are being very strongly dealt with along the way. You might have an aggressive Deliveroo Just Eat platform entrance into one of these smaller towns, but they're already existing alongside that and actively welcome that, because all of those big platforms cannot move into the smaller towns unless they can be charging enough, and that's a huge advantage for OPH. You have the inflationary and potential recessionary threats. These affect everybody, but one of the advantages of this model is that we are not talking about fine dining. We are talking about a very high quality product that can be still regarded as a treat, and a very strong process in place and supply chain that can control costs well, and allow people to trade down, as it were, still from maybe going out, still having something great food at their house. Staffing shortages is a threat for everybody. But there are two aspects to this, one of which is the very strong culture that they've got, and what is already happening is the fact that when recession hits, when businesses start to go bust, unfortunately, 31% increase in restaurant insolvencies in the last quarter. That means they're going to the staff shortages are just going to disappear relatively soon. We have the rising cost pace and supply chain issues, but that applies to everybody. And again, I have not seen anybody manage this process as well as Nigel and Janet. We have the reduced government support, but realistically, that's a worldwide. So that's a UK-wide threat. And again, the support is over, and the business continues to grow. We have the momentum, and we have the growth from that. We have the increased VAT, which is a threat, but the control of costs, the price increases, it would be very, very easy to argue that that is more of an opportunity than a threat, off the back of the fact that it's going to mean more businesses going bust out there. So that's the business that is for sale.